Welcome to the Transparent FX Academy. I'm Nick and I'm a top author and trainee with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite significant level of previous monthly resistance, which is now turned support. In fact, from here, all this previous rejection to the downside was created. After that, the market broke above the level and all that previous resistance was turned support here and again support here. So at the moment, we actually have a market which is testing previous monthly resistance turn support, from which we could expect a potential reversal to the upside. We can also notice that from a pattern standpoint, we have a clear impulse and correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how at the moment the market is testing the area in between the 50% and 0.618 of the Fibonacci taken on the monthly impulse, which is a quite strong area of monthly demand and support, actually confluence of demand and support, because we have both the structure support and the Fibonacci levels, from which we could see more institutional longing at that point, further increasing the probabilities of a potential move higher. We will be speaking about the institutional longing later on. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see a market that at the moment is rejecting support for the third time. We can see how the first test of the support was here and the market reacted with this rejection to the upside. Again, the market here tested its zone and rejected it to the upside. At the moment, we're testing for the third time the exact same level from which bullish price action could be expected. So also here on the weekly, we could expect potential bullish continuation away from this area. Dropping down on the daily time frame, what do we have? Now, from a daily standpoint, what we can notice is that we still have bearish structure from a daily perspective. This previous high, which is previous resistance from which this move to the downside was created, is currently still acting as resistance. What we would need in a situation like this is a potential breach above and break above this resistance, because what we know in the market is that previous resistance, once it gets broken to the upside, becomes support. So if we get this break after the break on the retest of the previous resistance turn support, that is where we would have quite good probabilities to see more potential institutional longing, at that point further increasing the probabilities of a move higher away from that zone, because until the market will remain below this resistance, it could easily continue lower. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, to check what institutions are doing, we can see how with the last reports, we have started seeing net positions getting increased once again. We went from having 101.9k net positions all the way up to 138k net positions, showing a strong increase of the net positions, which makes gold stronger. Essentially means that institutions are moving back to the bullish side for this commodity. So at the moment, institutions are moving back to the bullish side by closing a massive amount of shorts. We have 11,000 shorts closed with the previous report, and then again 14,900 shorts getting closed. With the previous report, we also have seen 9,700 longs getting added, and overall we just had 200 closed with the last report. So still, they have definitely the possibility to continue in this trend of increasing their net positions, so by closing their shorts and potentially also adding more longs, especially if the market will break above daily structure and then go for this retest, because this is a strong support area inside of which we have good probabilities of seeing more institutional longing, which at that point could push this price higher. So until the market will remain below this level, it could easily continue lower. However, if we get a break above this zone on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, these are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest you go and check it out as soon as possible. The link is also in description at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.